we're going to be switching things up a little bit. I'll give you a breakdown of the news items over the last week and a half that have moved markets the most. We're going to analyze what happened, recap what happened, and recap some of my guest highlights over the past week. But I won't be doing it alone. I'll be doing it with my team. So most importantly today, I want to introduce you, the audience, to my wonderful team, Cornelius Christian and Aaron Cole. These guys have helped me grow the channel, without whom I haven't been able to grow the way I have. So thank you both for being a part of the team. Gentlemen, why don't you introduce yourselves first, and then we'll get into the roundtable discussion where we analyze events together. Cornelius.
Hey, David, thanks for having me on. I'm really happy to be here. My name is Cornelius Christian, everybody. I'm a professor at Brock University, where I teach economics and have been doing so since 2017. And recently, I have joined the David Lin Report as a producer, and I'm really happy to be on here. Thanks.
Aaron.
Thanks for having me on, David. I appreciate that. Once again, everybody, my name is Aaron Cole. I'm a video producer here at the David Lin Report, where I've also had the opportunity to work extensively in the world of crypto, where I worked in coin market caps, data, and research department. So looking forward to bringing the news and covering the news with you guys here. So thanks for having me on, David.
So Cornelius and Aaron are producers on my show, but they're also really, really smart guys. Just during work, I've had the chance to just chat with them, shoot the barrel, so to speak, and just talk about news. And I realize they have a lot of good insights to share with not just me, but also to you, the audience, which is why I think this will be a very interesting segment. I want to start by talking about the latest headlines that over the past week have been instrumental in moving markets. First, Republic First Bank failed on April 26th. So just two paragraphs from the Reuters article here. U.S. regulators on the 26th of April seized Republic First Bank Corp. And agreed to sell it to Fulton Bank, underscoring the challenges facing regional banks a year after the collapse of three peers. Philadelphia-based Republic First, which had abandoned funding talks with a group of investors, was seized by the Pennsylvania Department of Banking and Securities. Now, I had the chance to speak with a former FDIC insider, Thomas Honig, who was the former vice chairman of the FDIC and also the former president of the Kansas City Fed. And he told me that although bank failures may happen still as an ongoing thing, it's likely that the government will backstop these failures and bail out some of the banks, thus mitigating a broader systemic shock in the financial system and preventing a broader financial crisis. You may want to check out the interview here. Should we, the government or the people, let the banks fail and not intervene?
Well, theoretically, yes, they should let them fail. But the practical matter is that the United States, through the great financial crisis to today, have made it a practice of bailing out institutions and setting the standard. So to change that, I think would be very difficult because the industry has come to rely on it, and so has the depositor and the other liability holders of these commercial banks.
The second item that moved markets, Q1 GDP advance estimates came out. Real GDP grew at 1.6%. Which was much lower than the consensus expectations. This underpins a worry that the economy may be slowing down faster than some may anticipate. Could we actually go into a recession or even just stagnation, which is what some economists have talked about? I've talked about this issue with several guests, including Professor Steve Hanke, professor of applied economics at Johns Hopkins University. You may want to check out this interview that came out recently this week. We also spoke about the Federal Reserve. Speaking of the Fed, to nobody's surprise, kept interest rates unchanged this week. What did surprise some people was that Jerome Powell announced a tapering of the taper, which is to say that he's going to, or plans to, slow down quantitative tightening. This may also have broader implications on the change in the money supply. We talked about this issue at length with Professor Hanke. How does this affect inflation? How does this affect ultimately economic growth and the markets? This covered extensively in my interview with Professor Hanke, so check that out. Inflation was hotter than expected, although the data came out last month, and that underpins the Fed's worry that inflation is not yet under control. Many of the guests I've spoken to this week and the past week have said that they expect interest rates to maintain higher for longer. Now, what does this mean for markets? Well, probably not great, because the stock markets earlier this year priced in at least 5 to 6 rate cuts. Most people have told me that these expectations have been adjusted somewhat already. The bond market is still expecting one cut. Peter Bookvar, CIO of Bleakley Financial Group, broke this down for me quite well. Check out this interview. We talked about his expectations for Fed cuts. His expectations for where interest rates are headed. He actually thinks that the long end of the curve, the 10-year is heading higher, and that he believes the Fed has every reason to keep rates higher for longer, rather. And so that was a very interesting talk. Finally, market moves. Oil continues to slide, so it's down to about $78 as we speak today on May the 2nd. I spoke with Bob Ryan, who is the commodity and energy chief strategist at BCA Research, and we spoke about oil extensively. We talked about the geopolitical risks underpinning oil. We talked about his outlook for oil, which is bullish for the remainder of the year due to supply and demand fundamentals. Check out a clip here. 2 weeks ago, there was a lot of concern about the war between Israel and Iran escalating to a regional war, if not, in the worst case, a global war. It doesn't seem that way for now. What's your read on the situation and how it would potentially affect oil?
Anything that threatens the Straits of Hormuz, anything that threatens, Saudi production or UAE production or Iraqi production, because it has to go out of the Gulf and through the Strait of Hormuz to get to the market. The market really stands up and takes note of that. In some instances, like if you shut down the straits for a month, the Strait of Hormuz, you could get to scenarios where you see $200 oil prices, and you would almost surely get direct U.S. involvement in there to shut that down and make sure that the straits are reopened. And they more than likely would have the support of China at that point, because China gets, somewhere north of 40% of its oil out of that part of the world.
Bitcoin continues to slide. This is a wild card, because a lot of people were telling me that post-halving Bitcoin would either stabilize or fall. Well, the people in the falling camp called it, and now it's down about 20% from its highs just a month ago. Now, not everybody is bearish on Bitcoin. In fact, most people I've talked to who are in the crypto industry are long-term bullish on Bitcoin. Jack Mallers, CEO of Strike, which is a very well-known payment system based on the Lightning Network, a layer 2 blockchain system that makes payments on blockchain, Bitcoin in particular, faster. Jack Mallers believes that Bitcoin is going to $1 million in this cycle. That is an extraordinary number. He highlights his reasoning quite extensively and thoroughly in our last interview together last week. Check that out. Stocks, well, I talk about stocks with pretty much everybody on my show at some point. One analyst in particular I want to call out is Milton Berg, who is a president of MB Advisors. Milton has spent several decades working with some of the top hedge funds in the world before starting MB Advisors. He actually said that, in his words, the great bull rally of stocks is over. It was over as of March 2024 this year, and we are most likely entering a great bear market. Most likely. Nothing's for certain, but he said most likely. He's been on the show last year, and he called the top in July perfectly. So listen to Milton. Take a listen to this clip.
We're quite bearish, but generally we think there's quite a strong probability that what we're going to be seeing is not simply a correction within a bull market, but most probably, or not most probably, but a greater than random probability, let's put it that way, that the great bull market that began in March 2009 ended in March 2024, and we will have a sort of a great a bear market ahead of us. However, we know that every bear market, early in bear market, there are always counter-trend rallies, and we're probably going to get aggressively short after the first rally. Now, when I say this, I know, for example, the bear market in 1973-74, for example, saw a series of 3% rallies, 3 to 4% rallies, about 4 of them, as the market was declining, early in the decline. But that's a standard bear market, lasted about 2 years or so. In a crash type market, you generally see a stronger rally. In 1929, you saw a nearly 6% rally lasting 4 days before the crash took place. In 1987, you saw roughly a 7% rally, taking something like 12 days before the 87 crash took place. So whether in a bear market, I mean, we're down, say, 50% in the next 2 years, or whether in a crash down 30% in the next 3 months, we're going to wait for the first rally and see what the technical condition of the market is, or what the internal action of the market is, and then we'll decide whether we go aggressively short. But we're going to wait for that.
Finally, gold. Gold has broken new all-time highs this year. It's been probably the number one surprise asset for most people who were kind of not paying attention to gold last year because it was a sleeping asset. But as we know, this year it broke out, and boy, did it ever break out. $2,400 was the top. It's now down to $2,314 as we speak. I've spoken to many people about gold. I've spoken to many gold miners as well. Everyone still seems optimistic. This is the one asset in which I've talked to pretty much everyone about, in which there's consensus bullishness. Everyone thinks it's going to go much higher. No one agrees. No one knows for sure how high it's going to go by the end of the year. But Rick Rule had a very good assessment. Watch that interview. He thinks it's going to go higher. He thinks that in the next couple of years, it could go to $9,000. He's not saying it will, but he wouldn't be surprised if it does. I also spoke about gold's shorter-term forecast with George Milling Stanley, chief gold strategist of State Street Research, and his projection for gold later this year is also up due to a host of reasons, including continued interest from central bank buying. As we know, central banks were heavily buying gold all throughout 2023 and into this year. So check that interview out as well. Finally, the last piece of news that really shook a lot of people was the proposal in capital gains increases in both the U.S. and Canada, where we are based. So in the U.S., the Biden administration has proposed an increase in the capital gains tax rate to 44.6% for those individuals and entities who earn over $400,000 in annual income. In Canada, the Trudeau administration has proposed a similar increase, but up to 66%. Now, neither of these have passed yet. They still have to vote on it, so on and so forth. But people are talking about it. We're going to break this down. So I'll pass it over to you, Aaron. We're going to talk about what you found in relation to the capital gains tax rate increase in Canada first. You've done a lot of research. You found a lot of good clips and analysis from other people. Let's hear what you got.
Yeah, so most definitely. I think there's definitely been a lot of discussion about everything going on with capital gains tax because,
well, first off, before we get into that, where do you personally stand on this? Should we get it? Yes or no?
You know, I'm not gonna go full Barry Eichenberg here, but I'm a firm believer. I'm a firm believer that yeah, you know, it's I'm not gonna go the route of saying taxation is theft. I do think that we should pay taxes. How much is the question, and that's always where the discussion lies. I do think that these new increased measures are a little bit drastic, just because regardless of whether you're raising capital to pay for government debt by raising capital in these ways, it's still not going to put a dent into anything if spending doesn't get put into check. So me personally, where I stand is that these increases in taxes aren't really going to do much except encourage brain drain. So we're constantly seeing a rising movement of people becoming more global, you can say, where you have people living more internationally. Like, for example, there was a recent study put out that since 2016, there's about 11% of all of Canada's population that are now living abroad. And it's to escape similar measures like this, where they feel like they're being taxed to death. Same thing for a lot of Americans who are now moving abroad, moving to Puerto Rico, for example, if they still want to have some advantages of still being a U.S. citizen. And there's also some people expatriating over this. We also see the rise in people moving to places like Dubai, things like that. So I think all that these capital gain taxes and these increased tax measures are going to do is just continually encourage, wealthy individuals, or even people who aspire to be wealthy and who are building wealth, to take their capital elsewhere, because they might see that as the only viable option for them to continue to prosper.
All right, let's figure out. Let's get your presentation going. you found some interesting things. Yeah.
Yeah, not a problem. So I'm just going to go ahead and get this up. So I found, I think one of the most interesting developments that I found was actually from a CPA. This one's based on the Canadian angle, but it was actually a CPA that ended up finding, just breaking down the myths behind the whole capital gains tax in general. So I'm going to go ahead and play this clip real quick. It'll basically, just give us a quick synopsis of exactly what's going on with this increased measure from, let's say, I think it was around 50% to now 66%.
We'll start off with an explanation of how capital gains tax currently works in Canada, since that seems to be where a lot of the confusion about this change was really stemming from. Currently in Canada, much like many other countries, capital gains receive a favorable tax treatment over your typical income, with the idea being that they want to incentivize people to invest in businesses rather than, say, just earning interest income. But unlike the United States, where there's a unique capital gains tax rate applied, Canada does things a bit differently, where you use your marginal income tax rate, the same as your earned income, but instead only tax a portion of your capital gain, with the inclusion rate currently being 50%. So if you bought a stock for $2,000 and eventually sold it for $3,000, your capital gain would be that $1,000 difference, and you would only apply your marginal income tax to 50% of that, or $500, meaning that effectively capital gains are taxed at 50% of your marginal income tax rate. With the 2024 budget, however, the federal government is proposing that we change the inclusion rate for capital gains tax from 50% or half of capital gains to 2/3 in 3 different circumstances. For annual capital gains earned above $250,000 for individuals, for all capital gains earned by corporations, and for all capital gains earned by trusts. So to be clear, Canada is not increasing its capital gains tax to 66.7%. It's increasing how much of your capital gains is taxed, the inclusion rate from 50% to 2/3, or 66.7%. In fact, after this change, the highest marginal tax rate you could possibly pay on your capital gains will still effectively be just 35.7%, again, at the highest possible level. And again, it's only in certain circumstances. So if you don't have any trusts, you don't have any corporations, and you're not expecting to annually see capital gains above $250,000, meaning that's how much you're profiting, you're not going to see a direct tax increase from this. Now, in circumstances where it does apply, there is a meaningful jump in taxes here of roughly 33.4%.
Yeah, so right now, the clip we just watched was actually from the Plain Bagels YouTube channel. So shout out to him. He's also a CPA as well, too. So he does have a lot of clients where this inclusion rate and this capital gains tax increase, it is going to affect them. And he broke it down in deep detail in this video. But I just want to gather your guys' thoughts about, like, what you kind of think about the entire situation here. Like, what are your thoughts about how this capital gains increases in both Canada and the United States could potentially affect investors?
Cornelius, I think you've prepared an entire slide deck for us with your analysis. No, let's not make fun of him. He worked hard for this. With your analysis on how this could affect the economy. By the way, Cornelius was very humble. I don't think did you even introduce the fact that you got your PhD in econ from Oxford?
Yeah, no, I didn't. I did go to Oxford.
So I have to plug that in for you. You're very humble, huh? So this guy is an Oxford PhD in econ, and he has something for us. So yeah, please tell us what you found.
All right, so I have a slide presentation for you guys, and my personal view, just to be completely candid on the capital gains tax, is at the very least, Canada should not be having a capital gains tax. Canada already has productivity problems relative to the United States, which is basically.
Are you saying we shouldn't wait? Sorry, you said we shouldn't have a capital gains tax. You mean increase?
No, we shouldn't have a huge capital gains tax. We should try to be competitive with the United States, and even a 35% top marginal or top capital gains tax, which is what the accountant alluded to, I think is really pushing it, because we have a lot of, as Aaron already alluded to, brain drain, but we also have a lot of capital drain and a lot of assets flowing from Canada to the United States. Because why would you stay in Canada when you can go to the United States and pay less tax just overall, right? And also the fact is, the United States has a lot more opportunities as well. So let's talk about this really quickly. So I have a quick presentation here. Motivation, with the Canadian capital tax increase, or proposed increase, I should say, Mavericks, which is a private equity fund, This guy, Ruffalo, warns that Trudeau's capital taxes could cause capital flight, which means that capital flows out of Canada into other jurisdictions which are more tax friendly. Maybe the United States, maybe Ireland, maybe other places. Who knows? The other motivation I think that's kind of interesting for this is, a lot of people say, oh, this is only going to affect the very, very rich. This is only going to affect like the top 0.1%, top 0.01%. But there's a lot of talk now about how millennials will probably be the wealthiest generation in history because of the great wealth transfer from boomer parents to their millennial children. To the extent that capital taxes go up or that inheritances are taxed after this or whatever happens, this is definitely going to put a dent in that entire narrative, in that great wealth transfer narrative. So two questions I had were, do capital gains taxes have a significant impact on capital flight? And number two, what are the effects of capital taxes on markets, on stock markets, equities in particular? So what does economic theory say? Economics tells us that if you're a small country that is not a major global player, basically anyone aside from China and the United States, if you're any other country, then you should not have a capital gains tax. Why? Because if in that particular case where capital is perfectly mobile, the capital is going to flow to the United States. It's going to flow to China or another place. It's going to flow to a regime, a small country, which has a zero capital gains tax. It's going to go to a country which has zero taxation or very beneficial tax rules. And big countries like the United States, they do have more freedom to raise taxes. China has more freedom to raise taxes. Why? Because the United States is the United States. If you're a company that's not located in the United States, you might as well forget about it because you're not going to be located among companies and other firms and clients that can benefit your business. The United States is the world's biggest economy. The US dollar is the world's reserve currency. If you're not there, then you're kind of losing out. So this is the U.S. capital gains tax. I found this chart. This chart basically shows three things, really, or three or four things, I should say. It shows the maximum tax on long-term capital gains, which is the red line. It shows the effective capital gains tax rate, which is really what matters, in yellow. And then it shows realized capital gains in the green. So you can see what was surprising to me, actually, was that Ronald Reagan, who's often portrayed as this champion of free markets and freedom, he raised capital taxes. He raised capital gains taxes in his, I think, 1986 budget. So he raised it. Clinton cut it. And then when Clinton cut it, you see an increase in realized capital gains. Of course, it kind of makes sense, right? U.S. capital flows don't seem to have been affected tremendously in line with the theory. I mean, there does seem to be a slight increase after Clinton cut the capital gains tax. And then foreign direct investment in the United States doesn't seem to really have had much of an impact either. A lot of foreign direct investment goes into the United States in general. So here's what the research says about whether capital gains taxes cause capital flight. Does it actually cause capital to flow out of a country? So what you have here is Ireland. Basically, Ireland in the year 2008 decided that they were going to raise their capital gains tax, I think from around 20 to 25% or something around there. And what this chart basically looks at is the difference in the capital gains tax between Ireland and the United States. The blue line shows the outflows out of Ireland, the outflows basically out of Ireland. And you can see that when the capital gains tax went up, that's the yellow line, capital outflows also went up. So it does seem to suggest that there is an effect of capital gains tax on capital flight. So capital gains taxes, what else can we say about them? They definitely reduce investment. There was a study which looked at the Small Business Jobs Act, which gave a capital gains exemption for startups. And it showed that exemption actually increased small business funding by $9.6 billion per year. Capital gains, now in terms of distribution, it does affect the top 0.01% of Americans who make around 80% of their money from investments and businesses, and therefore are going to get a lot more of their income from capital gains than, let's say, the middle class or lower class Americans. Now let's turn to the effect on markets. There is an effect on markets from an expected capital gains tax change. So if, For example, capital gains, if markets expect that a capital gains tax will be implemented in the future, you get something called a lock-in effect. What that means is that if you increase the capital gains tax, then people are just less likely to sell their stocks. It's not really surprising, right? If the benefit from selling your stocks it goes down, you're not going to sell your stocks. Now, what does that mean in terms of actual trading? Prior to a rise in capital gains tax, there's a rise in trading volume. It seems that people try to get out of markets quickly before the expected increase in capital gains tax. And prior to a cut in capital gains taxes, equity prices rise. People go into the market, right? They don't try to pull out of the market. Capital gains taxes, what other effects do they have? They seem to reduce mergers and acquisitions activity. Kind of makes sense. You're less likely to sell your company to a bigger company or to merge or whatever if there's going to be capital gains implications. And they also seem to raise the likelihood that companies seek debt-based financing as opposed to equity-based financing. So that's basically the presentation. That's what I have for you. And yeah, let's discuss it.
I'm going to play devil's advocate here because I just will. Okay. Capital.
Okay.
Look, I'm reading a bunch of articles from the other side of the debate, and most have advocated for a reduction in the income inequality aspect or problem that the U.S. and other OECD countries are facing. And indeed, wealth inequality or the rising wealth gap is probably one of the biggest problems our society is facing right now for a variety of reasons. Some would argue, and although the evidence of this may be contentious, but some would argue that a wealth gap or countries with an existing large wealth gap usually are seeing lower productivity anyway. And so what you want to do is mitigate this by equalizing wealth across the board, transferring wealth across the board in a way that boosts everyone's standard of living. I'm not trying to sound like a commie. I'm just trying to cite the research from the other side. And the argument here is that a transfer of wealth from the very wealthy who will not see a decline in living standards because of these capital gains tax increases and who will not actually see a decline in their funds performance if they are indeed managing funds in those jurisdictions which are affected, that marginal percentage increase will actually go to those in need and thus fund the future of the country and provide a relief for those who need it most. That's the argument.
Aaron, I'm going to ask you to opine on this.
Yeah, not a problem. I'd love to join in on this. So honestly, just to kind of like go into that devil's advocate argument, I think the main thing that the main issue rather than taxing wealthy people is more so I think it comes down to wages. Right now we're seeing a lot of the things that a lot of people need to spend their money on, such as like housing, real estate, regular expenses such as groceries, things like that. That's where a lot of regular middle class individuals are spending their income, right? And if wages aren't growing to a point that they're not allowed to, get access to these things or get access to the same amount of things that they were once able to because inflation is running so high, I think that's where the real issue lies. And a lot of inflation comes down to government spending and how large our governments have become. The bigger the machine becomes, the bigger the bureaucracy is, the more expensive it is. And taxing the wealthy doesn't automatically guarantee that income is going to go to less fortunate individuals, because at the end of the day, the government has to allocate those funds to whatever they say it's going to help with. And we often know that that's not the case. The government is usually the most wasteful spender, right? Like they spend money like your drunk uncle or something like that. Like, you know what I mean? Like they don't a lot of them, like even for example Trudeau, like his famous quote, "The budget will balance itself." This is the mindset of a lot of bureaucrats, right? And if you give them more access to more capital, that's what they're going to do. They're just going to spend, right? So I don't think this increase in capital gains tax or necessarily raising tax is going to really do anything for any lower income individuals and things like that. I think the main issue comes down to how can we encourage wage growth in a way and hold maybe business owners or even large conglomerates or corporations accountable for that, rather than trying to get the money on the back end, because all they're going to do is hire a couple accountants, find ways to shift the money globally. And that's also a thing. What, funny enough, Barry did mention that, Barry Eichengreen, where he talked about something which is a growing concern for investors, where there's going to be a lot of cooperation amongst different countries across the world to basically have a tax follow you no matter where you go. So have like a global tax rate, and that's not going to solve anything at the end of the day, because it's almost like you're being forced to pay for something that you're no resources and sources that you're no longer going to be using or participating in. So it doesn't make sense. It's not fair. It's kind of draconian, kind of scary when you really think about it. But at the end of the day, I think where the real issue lies is wage growth. And if there's a way to, I'm not the PhD here, but if there's a way for us to theorize, or even, some of the smartest individuals in our society to figure out how we can, challenge corporations to, combat wage growth and invest into productivity for their workforce, so that they can produce more things, so that these type of things can happen. I think that's the true solution, and obviously curb government spending.
Great thoughts. I think we've kind of diverted from talking about capital gains taxes to wealth transfer and income taxes in general, but I mean, that's a good discussion. I have a question for Cornelius now. Why is it, okay, I'm just playing devil's advocate here, why is it that the countries with the highest Gini coefficient, which is to say the most wealth inequality in the world, tend to be the poorest?
Yeah, that's a great question. That's actually an interesting question to me, because I did study development economics when I was doing my PhD. And my interests, of course, changed after that. But really, the reason for that is because a lot of the inequality is generated by corruption and by bad institutions. When you have a dictator, let's say in a country which has oil resources, and that dictator manages to use the force of the state to accumulate all of those resources for himself, his family, and his cronies, then it stands to reason that your Gini index would be particularly high. So I guess going back to the question around inequality, really the question is, why is the inequality generated? Is it generated by the market? In which case you could argue that it's good, because the market knows how to allocate capital. The market knows how to allocate resources. Or is the inequality generated by government, and by government grift, and by government force? And in the latter case, it's probably not a good thing. And I mean, you can also extend that, I think, even into the United States. I mean, yes, the United States, you could say, has a lot of inequality, but I'm curious how much of that is due to government, government excess, shall we say? I'm with Aaron here. I'm not saying that we should abolish the state at all. Going back to capital gains tax, right? Going back to that, the market, I think, knows best how to allocate capital. And why is that important for wealth inequality? Because wealth inequality Aaron actually mentioned this, wages are what matter. How are wages, what determines the level of wages that a worker has? It's their level of productivity in a market. In a free market, right? The level of productivity determines wages. So I tell my students, I had a student who got his degree in computer science. He was going to work in Toronto, and I think they were paying him like $80,000 Canadian, right? So that's maybe, like, for your US viewers, it's like $55,000 US. And then he's like, okay, so like if I were to work in California or New York, or really anywhere in the United States, I would be getting paid like at least $90,000 US. Right, which is like $110,000 Canadian. Why is there that discrepancy between the United States and Canada? It's quite simple. It's because of productivity. There's a lack of productivity. And I'm not saying Canadians are not as hardworking as Americans. I'm saying that we do not have the technology and the resources and the capital to be productive. Right, like the software is you guys know this if you've worked for Canadian companies. The software that's available for Canadian companies as opposed to American companies is much inferior. So if you tax capital gains, my point is that it prevents, in some ways, companies from investing their capital in building productivity and then allowing workers to have higher wages, allowing workers to compete. That's really where I see the crux of the problem.
I'll add my thoughts and I'll move on to another topic. So my actual thoughts, I don't think they should do this. I think it's a bad idea for a lot of reasons. But one thing we haven't talked about is included in the 44.6% in the U.S. On the U.S. side, Biden's proposal is a 25% annual minimum tax on unrealized capital gains, which I think is just, I'm going to say it is really, really stupid. Okay, well, arguably, if you raise the capital gains tax on realized gains, that could arguably, or that could be debated as to whether or not it would have an actual impact on fund performance or fund behavior or capital flight. Your research notwithstanding, the capital gains tax was already high to begin with. One could argue that a minimal marginal increase may not have a significant impact, but taxing unrealized capital gains would, first of all, bar new entrants from entering into the capital markets, and two, really just incentivize people to move their money offshore. This would be the death of the American capital markets, in my opinion, if they go through ahead with it. I don't think they will. I don't think that. It astounds me how Biden is proposing this in election year. It really just astounds me. But maybe they've given up. I don't know. Let's see. I don't think it'll go through. I think this will be a non-issue in a couple months. Let's see if I'm right. Let's move on to another topic. I want to talk about Trump being on the Fed. Now, this was an article that was circulating on the Wall Street Journal. I talked to Professor Hankey about this at length, so please watch that interview. So what happened was a document, a secret document was circulating, supposedly drafted by Trump's close allies, but it was so secretive that not even Trump's closest aides were made aware of this. And I asked Professor Hankey, who is well acquainted with some of Trump's closest aides, including Steve Moore, and Steve Moore didn't even know about this document. Professor Hankey was called by, according to this interview, he was contacted by the Financial Times, who asked him, "Do you know anything about this document?" And he said no. So what this document is it outlines a secret plan to have Trump be more involved with the Federal Reserve, going as far as to say that Trump may be sitting on the board of governors in an acting basis. Trump would then directly provide consultation to the Federal Reserve on interest rate and FOMC decisions, essentially having a direct impact on central bank policies. And of course, Trump's closest aides denied this. They haven't seen this document. It's debatable whether or not this document actually exists. But let's just talk about the theory behind this and whether or not we think there should be more oversight. So there's two issues to be discussed. One, central bank independence, which is the crux of this issue. Obviously, if we have an elected official directly intervening in FOMC decisions, it's no longer a central bank that's independent. That's number one. But Professor Hankey argued that aside, there should be more oversight. There should be more auditing of the Fed, whether or not we should have somebody from the government intervening in the central bank. That's a separate issue. He argues no, but there should be other ways to audit it. I'm going to get your thoughts. I'll start with Cornelius.
Yeah, I would agree with Professor Hankey because, the Fed is in a unique position.
Yeah, I know you want to audit the Fed, right? You don't believe this gold in Fort Knox.
I want to audit the Fed, make sure they have their gold. But no, really, the Fed is in a unique position in the sense that basically, the Congress confirms, I should say, the Fed president and the FOMC board. And then after that, there really is no way to eject a crazy or loose board member. Like in Canada, by contrast, for example, the Minister of Finance is in charge of the Bank of Canada and does have a say. The Deputy Finance Minister as well has a say in the Bank of Canada meetings. Now, that doesn't mean that they can say, to Tiff Mackham, who's the Bank of Canada governor, you have to lower rates this time, or it doesn't mean that, but it does mean that there is some kind of democratic accountability there. Now, in the extreme, there were cases, I should say, in Canadian history, like the Coyne affair of the 1950s, where James Coyne, who was the Bank of Canada governor back then, he went around Canada basically blasting the government and telling everybody, the government should spend within its limits. The government is not doing that. The Diefenbaker government at that time in Canada, and the Diefenbaker government fired him. And this actually instigated a political scandal. He was ejected from the Bank of Canada. But I don't see that as particularly a bad thing. If you have a loose cannon as a Bank of Federal Reserve, I should say, a Federal Reserve governor or FOMC board, I think that there can be democratic mechanisms for removing them. What do you think, Aaron?
I personally, honestly, me personally, abolish the Fed, abolish the central planners, but
I agree with that too.
I should set you up with Duck Casey. You guys have a great drink together.
Yeah, don't worry, I can be the Gen Z Doug Casey. But but yeah, aside from that, aside from my thoughts on abolishing the Fed,
quick,
yeah, aside
that escalated really quickly.
No, but seriously, aside from abolishing that, but in a perfect world, I do think some oversight does make sense, and having oversight there. But I think it would be more interesting if it was someone who was elected to be that, or to be that person who has oversight rather than someone who's appointed, because then you can get into situations where political lines get drawn, just such as like the U.S. Supreme Court, for example, or any ministers that are appointed. It basically comes down to like whenever situations come up or anything has to get done, it's basically drawn on party lines, and what that basically leads to is no collaboration and no action being taken. So I do think it would be interesting proposal to kind of have some oversight there, but I just think it depends on how it happens, and if there is like a true democratic way of holding them accountable rather than having people generally appointed to that type of role.
Here it says I'm reading the Wall Street Journal article. The group of Trump allies argues that he should be consulted on interest rate decisions, and the draft document recommends subjecting Fed regulations to White House review and more forcefully using the Treasury Department as a check on the central bank. The group also contends that Trump, if he returns to the White House, would have the authority to oust Jerome Powell as Fed chair before his 4-year term ends in 2026. The people familiar with the matter said, though Powell would likely remain on the Fed's board of governors. I'm not sure why the last sentence was mentioned. I didn't. Was there beef between Powell and Trump that I missed? Somebody fill me in on this.
Wasn't there that time that Powell was supposed to reduce, or at least Trump wanted Powell to reduce interest rates at one point, and he was like, no? I could be wrong here. I could be misremembering.
Okay, well, I'm not really sure myself. So if you're watching this, comment below why you think Trump may want to oust Jerome Powell. He's not saying he will, but in this article, it says that the document suggests that this could be a possibility, or at least an option, if Trump were given the authority to do so. I'm not even sure if the legalities of central banking would have to be amended to make this happen. So if you're a legal expert, comment below on what you think, and more generally, comment on what you think of the capital gains tax rate proposals. Where do you stand on this debate? Write in your comments below. We have one last subject to cover, which is the issue of the TikTok ban. I'm gonna let Aaron take the lead in this discussion. You are the social media expert of the group. What's the latest development here? What happened?
So it seems that that Biden has officially signed into law that TikTok is going to have to be sold. I believe that the TikTok's parent company, ByteDance, they have about 270 days in order to sell TikTok, and if they fail to do so, that would lead to significant consequences, so they say. And ultimately, what those consequences would likely be is that TikTok would be banned from any app stores or Google Play Store, from any device in the United States. So it would also prevent internet hosting services from supporting it. So doesn't matter if you're on AT&T, Verizon, anything like that, like it's going to be blocked, and that's going to be pretty interesting. So it seems that it is happening, but I'm more so interested in to see if TikTok is going to sell it. I don't think, like me personally, I don't think TikTok is going to actually sell their brand. And even if they do,
that's interesting, because the CEO has already said that most of their data centers in the U.S. are operated by U.S. companies to begin with, right? So it wouldn't be a huge change for them. But I'm curious to get your thoughts.
Yeah, the reason why I don't think that they'll actually sell it is because think about it like this. TikTok has a proprietary algorithm that they don't want other US companies or any person who might buy it to get access to it because as you may know, whether you believe TikTok is a good thing or a bad thing, we all know its algorithm is powerful. It could be powerful in the wrong ways by promoting tons of brain rot content on there. As we're very familiar, but there's also tons of great content on there, and that's the fine thing.
Okay.
The algorithm is a very powerful proprietary thing.
I want to get to this debate as to whether or not it should be banned, but let me just interject my own opinion. I've been hearing this a lot. Yeah, the TikTok algorithm has been used by the Chinese government to brainwash Americans because it's feeding Americans dumber, quote unquote, dumber content, and the Chinese kids in mainland China are seeing videos about math or chess and whatnot. Okay, let me just address this. First of all, there's no evidence that the algorithm has been manipulated to do this. Second, you scroll and you determine what you want to see through your own scrolling pattern. So on my own feed, yeah, I actually see a lot of like science and math stuff and like econ stuff. Is it because I'm Chinese and I'm a nerd? No, maybe the last part, yeah. But I promise you the Chinese government is not messaging me privately and say, hey, we're going to feed you all this stuff because we want you to be smart. And then the other Americans, we want them to be dumb. I don't think that's happening, guys. You determine the content that you want to watch based on your own scrolling patterns. I promise you, start scrolling on more chess stuff over the next month or so. The algorithm is going to feed you more chess content. If you keep scrolling on teenage dancers, I mean, that's probably all you're going to get. And by the way, what's with calling content creators dumb? I mean, you're the one making the content, right? So if you're saying, well, the Americans are dumb because they're watching the content, well, the Americans are creating the content in the first place. The Chinese government is not going to the content creators and say, you must make stupid dance videos to make the population dumber. Like, that's not happening. Content creators are making content. People like their content, whether you believe or you are in the camp that you think it's dumb or intelligent, whatever. That's your opinion. But don't watch it if you don't want it. I promise you, if you don't watch it, the algorithm is not going to feed you that content. So I don't believe there's a broader manipulation at play from the Chinese government simply because that's not how the algorithm works. So I've said my 2 cents. Cornelius, you volunteered to take the other side of this debate.
Yeah, I'm gonna play the devil's advocate. Although to be honest with you, personally, I'm against the ban, but I'll play devil's advocate, right? Okay, like Aaron, you know that the TikTok app cannibalizes your entire phone data. It even records your keystrokes that you put in for other apps. And so, really, my question is, I mean, do you really believe that the Chinese government is not having access to that kind of data? I mean, you're a company like ByteDance, you operate in mainland China. I'm sure that there's been a tap on the shoulder at some point from, some CCP, Chinese government ministry saying, hey, can you share your data with us? I mean, the United States, to be fair, to be quite frank, the United States does this with Facebook. They do this. They used to do this with Twitter, right? Before Elon Musk bought it. They do this with Instagram. They do this with pretty much every app or every social media company that's an American company. The US government has tapped their CEOs or CFOs, C-suite people on the shoulder and said, hey, share your data with us, or we're going to make things difficult for you, right? So how do you respond to that?
It's funny enough. I think you said it right there. I was just about to come back with the point about Facebook. Anytime I think a lot of people just don't realize that once you sign up for a social media platform and you start using it, you are signing off you're signing off on your privacy essentially. It's just that a lot of people don't actually read the terms and service agreement. They just say I agree and move on, right? And these are things that all companies are doing, even if they're not necessarily actively shipping your data to the Chinese government or to the US government in the case of like Instagram, Facebook, things of that nature. I think it's just out of privacy concerns. I think if you're concerned about privacy, I think you should just avoid these platforms altogether because they're going to share this data. Even if it's not given to an agency, they do have this data, and whether it's on an Oracle server in San Francisco, or if it's in a server on Beijing, or in.
Sorry, Aaron, just one question though. Like, don't you think that TikTok it gathers more data and it's more forceful in the type of data it gathers than apps like Instagram?
Me personally, I say no. I think the only difference is they just do what Facebook did, but better. I think that's the reason why there's a lot of push to ban TikTok. It's because there's people who are interested in getting their proprietary software, which basically built upon what they did, but just did it better. Right. And I think that that's the main reason where the concern, and there's just the angle of China is our enemy, or we're a nemesis. They're a nemesis, so they're pushing that angle that we cannot support this. But in reality, I think it's more of the fact of no, we want to use this type of technology, but you can't. So I think when it comes down to privacy and how things are done, because that was the whole issue with the whole Facebook pixel thing. Like, I'm not sure if you're familiar with like Facebook pixels, but just to give you guys a brief overview. So Facebook pixels are essentially a way on how Facebook used to track users off of the platform whenever an ad went live. So let's say you were scrolling on Facebook, and you ever notice how sometimes when you're scrolling, you might have said something on your phone, and then you see it on your Facebook feed or Instagram feed, you see the ad for it, you're like, oh man, I was talking about a guitar and now I see a guitar. The reason why that was able to happen is because the Facebook pixel would essentially follow you across other platforms or other things that you're using. So whether it's your Safari browser or your Google Chrome browser, it would follow you across these platforms. But what ended up happening is Apple recently put in a blocking feature where if you notice now, if you have an Apple device, it always says, would you like this app to track you? And you hit allow or don't allow. And obviously most people are going to be say, I don't allow it, right? And that's what pretty much caused Facebook to kind of go through a little bit of a downfall, a little bit of a downturn in their advertising effectiveness and efficiency. And TikTok has just found better ways to do this in a similar fashion that Facebook was doing it. So I just think it's more about like there's certain people who are interested in finding out how they were able to maneuver in that type of environment, because it all comes down to ad dollars at the end of the day. TikTok serves ads better. It keeps the users more engaged. That's also, side note, that's also another reason why in TikTok in China, if you're under the age of, I believe it's 13 or 14, they limit your TikTok usage to like 45 minutes to an hour versus like over here, it's like there's like no limits, right? And that's
what happens if I want to watch it for like 50 minutes? I use my parents' phone or what?
Hey, if you use your parents' phone, that's fine, because your parents' account is going to be over the age of 18, right?
Yeah.
And that's a thing. So TikTok, like in China, they just have specific laws about social media for underage children in general. And I think that's where the disconnect comes from, where in the West, and whether it's in America or Canada or United Kingdom, Europe, everything like that, like we're a lot more liberal in how our children and our younger siblings use social media versus over there, they're just more strict with it. It's the same axis, but they're just strict.
I want to go off topic, and I want to get Cornelius' thoughts. Okay, so you were talking about social media usage in China. So there's a legislation that was introduced, I can't remember, a year or two ago, but basically children can't play video games for more than a couple hours a day. And they actually just shut off your account, because you have to log into like the Chinese equivalent of Steam or something, and then they'll like monitor your account, they'll shut it off. But it's interesting because I was seeing on social media that in one or some Chinese prisons, they force the inmates to play World of Warcraft and farm gold. So World of Warcraft, for those people watching, is an online RPG where you play an avatar, a character, and it's a really fun game. I'm a big fan of the game, but what they found was that the prison wardens found that it's actually quite profitable to get these players to farm in-game gold, which is to say that the players play the game, they get the gold, and then they sell it for fiat dollars, right? So it generates, it's basically slave labor, except instead of doing manual labor, you're playing video games and the money goes. So it's like the Chinese government doesn't want the kids to play video games too long, but as a form of punishment, the prisoners have to play World of Warcraft. It's just...
I think a lot of people really don't understand that there's a whole world in the gaming world where people they farm accounts because people they love these games and they invest so much time. But guess what? Imagine if you're in that scenario, you're a kid, you can't invest all that time into it, but you want to be double prestige in this game or get to a certain level, you will pay someone to do that for you. So there's people even across the world, like that's a real thing where they'll play games like World of Warcraft, Call of Duty, Dota, for example, and they play these games for other people so that they can rank up for them on their behalf, and then they'll sell it. So it is a profitable business that's already happening on smaller scales individually. So hearing that they're using it as a punishment for prisoners kind of makes sense. It's a profitable business, and I guess for the prisoners, they don't really see it as a punishment because, you know, what would you rather do, physical labor or mental labor?
By the way, you guys brought up Facebook. So the scandal around Cambridge Analytica was not so much that Facebook collects user data. We all know that. The scandal was around the fact that they were selling user data to third-party apps and vendors, right? So this is where I stand in the debate, and I may be controversial here, but again, like you said, Aaron, I agree with you 100%. If you're signing up for a social media service, you're giving up some of your privacy in those terms. I mean, you've agreed to upload your profile, assuming it's a real profile, pictures, personal information, data, credit cards, birthday, address, so on and so forth. Your user preferences, what kinds of things you browse on the internet, that's collected through cookies. Arguably, we can debate whether or not the social media site should be allowed to do that. But the age-old argument here applies. If you're not paying for the product, you are the product. And I actually don't have a problem with that. But that's where I stand.
Well, I have one more thing to add though, Aaron, just to play devil's advocate. This is not really a ban, right? This is basically ByteDance is given 24 I think it's 12 months actually. It's given a year to divest from its ownership stake in TikTok. And you could say, yeah, of course, they have their own proprietary technology, but if an American company like wants to do business in China, typically the Chinese government will kind of twist their arm into partnering with a Chinese company that then takes their intellectual property, right? I mean, I'm pretty sure that Tesla just partnered with, was it Baidu? I can't remember really, but I'm pretty sure that involves some kind of transfer of intellectual property over to a Chinese partner and then maybe over to the Chinese government, right? So is this really a ban is what I'm trying to ask. Is this really a ban?
Well, hold on. Let me just make a crude analogy here. If the government comes to your house and says, you have to surrender your house or we will ban you and send you to a gulag, are you banned? Are you censored? I mean, you could surrender your house.
Well, you're
right?
you're not sent, to be fair, you're not, no one's sending TikTok to the gulag. They're just asking them to.
Yeah, it's a metaphorical gulag. You're banned. They're banned from the U.S. They're you can't access. It's financial gulag.
Financial gulag, fair enough.
You guys are supposed to have a debate, not agree with each other. What's your ultimate stance here? So, Aaron, you're not. Can you what did you say? Where did you stand on this debate? Aaron, you are for. No, you are against the ban.
No, I'm against the ban, and I think I'm against the ban primarily because
you don't think you don't think there's a national security threat.
No, I don't. I won't say it's a national security threat just because, like, I think. Okay, I'll clarify. I don't think government officials or anyone should have it on their device because then it becomes a national security threat. So I'll be specific with that because, like I said, you are acknowledging that you're giving up your privacy to a degree. So if you have a career where you handle sensitive information like that, that is a risk. So I'm not going to not acknowledge that. However, for the general public, it really doesn't matter if you ask me. What privacy what is China going to do with your data? Like, that's my question. Like, what is China really going to do with your data? Are you really a threat to China? You know what I mean? But like a government agent, yeah, they might want to have some information because maybe you might be working on a certain project that they might want to know about, things like that, and that could lead to.
It's an interesting point because China can't really do anything directly to me, but the concern from the government here and in the US more in particular is that the Chinese could use user data on an aggregate level to either formulate a plan to attack the West or manipulate us through cyber threats or cyber attacks, manipulate our elections, manipulate our thoughts using algorithm manipulation, so on and so forth. That is probably one of the threats. It's not so much that they have a direct threat on us, it's more to the security of the nation state.
So I have a theory on that. I do actually think that TikTok, I'm not sure it poses a threat in that sense, but I've noticed that it allows a lot of content that questions U.S. State Department narratives, shall we say, right? U.S. State Department narratives, especially around foreign policy, not only toward China, but also toward the Middle East, the Russia-Ukraine conflict. And young people are seeing that content. And now you see, when you look at polls, for example, young people's opinions on the Middle East conflicts are changing, on Russia, Ukraine are changing. And I think that, this is actually one of the biggest things that worries the United States State Department, and why probably TikTok is getting such a, it's become such a target, right? That's my theory anyway. I don't know what you think, Aaron.
Yeah, I think I'd agree. I think young people definitely, that's where they get their news from. So it is the easiest medium where if you just want to control a narrative, regardless of whatever the narrative may be, you might want to tighten up on certain things, and that's why things like I believe like what's going on with Twitter and X with Elon Musk is very important, because like he allows for multiple opinions. Like you see all types of opinions on there, and I think that's the main thing that really needs to happen more in society, rather than entering into echo chambers. We need to see the good, the bad, the ugly, regardless of what you may believe and what side you stand on. You need to see both sides of something, because that's how you get open to different perspectives. And that's why I think it's good to have other perspectives and hear other perspectives out. Doesn't mean it's right, but like people, just because people have the right to say what they want, doesn't mean that they're right. You know what I mean? But I do believe you have the right to be wrong. Like that's okay.
I have one final topic and we'll close it off here. This raises the issue of censorship overall. I think the bigger problem with younger people getting their news and information from social media is that there's just a lot of misinformation, disinformation spread on social media on all subjects. Okay. Everything you see, you have to just double check and verify for yourself. And younger people, when you're watching a 10-second, 30-second clip on social media, they're not going to have time to do that. They're just going to be almost indoctrinated into thinking whatever is fed to them on a lightning fast basis. And so what has to be done about this? There's two arguments here. Well, first of all, that's not the Chinese government's fault. That's just content creators being irresponsible. Right. I can see that because I'm a content creator. I know how difficult it is to put out information, fact check everything, make sure it's clean, make sure it's accurate. But most people don't. Well, not most people, but a lot of people don't do that. That's not the Chinese government saying to these people, look, make fake news and propagate that to the American society. I promise you that's not happening. People are just doing that because they're dumb. And so what can be done to police this? Right. I'm actually once upon a time, I was all for complete freedom of speech. First of all, freedom of speech isn't freedom of being double checked and verified and fact checked. It's freedom of speech from the government. Meaning what it really means is you can say whatever you want without being fear of sent to a gulag by the government. It doesn't mean that platforms don't have the right to kick you off if you're just a terrible content creator violating their own content terms of services. Guidelines, that is. And so I actually believe that some moderation is necessary from these platforms. Not too much, but some. So that's my argument. Where do you stand? Agree or disagree?
I actually think that Elon Musk's model right now on Twitter, there's something called community notes. And that is, if somebody makes an atrociously bad claim, then there are, there are certain people on community notes. There's like anybody can do this, from my understanding. Anybody can comment under the tweet, this is inaccurate information, this is actually what the source says, et cetera, et cetera, et cetera.
Right, but then you get trolls actually, saying this is inaccurate when indeed it may be accurate, right? So how do you balance that?
Yeah, I don't know. I actually think that what the real question is that community notes moderation tool better than having some arbitrary dictator saying that this is inaccurate? Like, for example, now Snopes.com, for example, is known for fact-checking news, but it's known actually to have a very leftist bias, right? So if there's something that comes out about Trump or the Republican Party, or whatever it happens to be on the right side of the spectrum, then Snopes is much more likely to flag that as opposed to something that comes out about a leftist politician. So I really don't know which one is a better tool, because every tool I think is going to have every tool that is used for fact checking is going to have some kind of problems, right? Is it going
I
to
actually
be?
think then AI could possibly be a solution if you design a system that is proven to be politically unbiased, and all it does is fact check things for you to the highest degree of accuracy possible. Basically, an impartial spectator that is not human. That could work. Um,
Yeah, I think it could help, but the main issue comes down to like who's programming it, right? Like we saw in the early days of Chat GPT, for example, they had a very like leftist spin. Like you could ask it a certain question about like let's just use Barack Obama, for example, and give you like a glaring, like clean review. And then you ask something about Trump, and then it would insinuate that it's not going to be biased, but then give you a biased answer. So it's that. Like, so it's just like, all right, like the AI is only as good as the parameters people make.
I have a response to that. Okay, so I've seen that too, and I'm not a computer scientist, but something tells me that all it's done is scrape you information on the internet, and admittedly, there's a lot more, I would say, controversial articles or claims or things written about Trump than maybe Obama. And so maybe the algorithm's just scraping that. It's not actually, it's not AGI. It doesn't have a thought of its own. It doesn't say, well, I'm going to make a slant on Trump. We don't have any evidence to say that it's been programmed that way. All I can say is that it scraped data before 2021 and produced whatever was given on the internet. Anyway, that's all the time we have today. Great talk. Let us know, audience, what you thought of this episode. If we should do another one, or what we should talk about next time. So comment below your thoughts on any of the topics we've talked about so far. The idea of this roundtable is to start a discussion amongst the community on this channel. So spread the word, like and subscribe, and we'll see you next time.